at IFC controls and the requirement for IFC and who all have to approve it. It's not just the auditor, it also has to be an independent director. And then from the inside the company, there has to be a comment on it by those charged with governance, that is the audit committee, as well as the board of directors. So there is a four-way check around the same concept of internal controls. Now let us move on to something called as data analytics. Data analytics is basically taking the past data and doing an analysis out of that. What analysis do we do, Abdina? There could be a wide range of analysis. You can simply take one accounting entry and do some analysis on it, or you can do some comparison with it. You can compare that data with some previous numbers last year, previous last year. So last 5 years, last 10 years, last 20 years, whatever data it is within the company, you can compare, or with the industry also you can compare. Or you can compare with the sister companies, see how much of deviation there is between the nature of expenses in spite of being similar companies. So all that analysis can be done at various levels. It could be an entry level, it could be a ledger level, or it could be at the TB level, it could be at the financial statement levels. So there are various ways in which this can be done. Some of the examples that we have seen are Monte Carlo analysis, 5% analysis, deviation analysis, ratio analysis, and then you have the Benford's law comparison as to check whether the first digit is appearing in accordance with the universal law of Benford. So these are some of the techniques. It's not the full, it's only some of them. Okay. So these things basically help us analyze certain things to see if everything is in conformity with the generally understood principles or generally understood methodologies. Okay, guys, I hope I'm audible. Just confirm me if I'm audible or not.
Yes, sir.
Okay. Okay, so let's look at this point. We are at page number 6.18, the second paragraph. Data analytics can be used in testing of electronic records and data residing in IT systems using spreadsheets and specialized audit tools, that is IDEA and ACL, to perform the following. IDEA and ACL are the most common or most famous audit softwares. In the audit softwares, எப்படி work ஆகும் அப்படின்னா, you need to either upload a specific ledger or you need to upload a TB, and based on that you need to select what kind of analysis or data analytics you want to do out of that. Let me check if we'll find anything. There are no actual examples that have been given. So, one. Okay, anyways, it's it's not very detailed, so let's not waste the time on it. Basically, the idea and ACL are basically the ones that are generally used in the organizations across the world. There are other softwares. There are even specific softwares that are developed in-house by audit firms. Recently, there are new softwares coming up. We last month or last to last month we heard about a girl from North India. She has developed analytics software which can be automated as well. With robotics and audits can be completed within 2 days, it seems, with using that. So it's like absolutely fast as well as a lot of data analytics that go into that. She has developed it independently and on her own complete software. So these things will keep evolving as we go forward because data analytics is a subject that we are just touching the infinity. So we just started exploring that infinity, and in future there'll be many ways in which you can now future there will also be these instances considering a blockchain implementation. Now India has in the budget they have confirmed that they will be taking up blockchain technology. So once that blockchain comes, what will happen is for every ledger there has to be a ledger as in for transaction. For every transaction there has to be a corresponding entry and exit. So let's say there is the books of A Limited, then there has to be a corresponding sale entry in the books of B Limited. Only then the ledger will accept. Ledger as in the blockchain technology will accept. So this is something that is how this is how the GST returns get reconciled, right? One party says I have purchased this, the other party says I have sold this. So GST authorities will check if this is getting reconciled or not. So that is one control. But going forward, even the regular accounting entries, if someone says that I have purchased from B Limited, then B Limited has to even say that I have sold to this company A Limited. So this will go integrate with the accounting itself. So this will help the data analytics in a real time actually. There are softwares where in the dashboard itself they display these data analytics where they say this month, these are the number of transactions reviewed, these are the number of transactions pending approval, this is what the financials look like, this is what the profitability looks like, this is what the expected pending number of entries look like. Everything the softwares give these days. In with respect to audit, what exactly are we looking for when we are using this data analytics software, Abdina? These are the things that ICA is telling. First, check completeness of data and population that is used in either test of controls or substantive audit tests. This is the first thing, very first thing that all data analytics software talk about. What is that? Data cleaning. It's called as data cleaning. All the data that we received, it's not always in a presentable form. The ledgers that various companies produce is not always in a uniform format. The trial balance that is generated is also not always in a uniform format. So the data cleaning under the software has a way of taking the input. So you need to modify modify the output file, modify the TB file or modify the ledger file in a way the software understands. So you don't have to change the columns and all. You just have to tell in which column what is the data that is available. So based on that, this software too will do the automatic analysis after that. So data cleaning is always the very first aspect in any data analytics that you do or go. Next, selection of audit samples. Once the data is clean, you upload either for the test of controls or substantive audit test. Test of controls, you remember, it is to check whether there is adequate approvals, adequate documentation, adequate reconciliations, verifications, all that stuff. Then you have substantive audit tests, which are the actual audit procedures. Next is selection of audit sample. Once you have uploaded the data, there are various methodologies of selecting a sample. Two of the examples are random sampling and systematic sampling. Random sampling does not mean it is random. Random sampling means there must be a scientific methodology behind selecting that sample. Please don't go by the word and write in the exam saying random sampling means generated in random. No, it is absolutely wrong. Random sampling means there must be a systematic or scientific logic behind selecting that sample. There must be some particular logic. Let's say every third transaction, that could be a random sampling. Every third transaction, there is no, technically we are not limiting anything, we just want to take 30%, so we are not going by any ABC analysis, anything. We are simply saying every third transaction. So if you take every third transaction, there is a logic to it. We are saying that every third transaction, so that logic is what makes it this come into the random sampling. Then you have systematic sampling. Systematic sampling also, you do this ABC analysis where you split, you work a little and split the ledger or trial balance or the ledger into particular levels. Yeah, I hope you are aware of the ABC analysis. A stands for most of the transaction. B is those medium ones which are neither high value nor low value. C is like those lot of low value items, but they are not material to the organization. So A, B, C, you will do the split, and then based on that, in A you will take one sample, in B one sample, and in C one sample. So such sort of things are systematic. This is only now we have cleaned the data, uploaded it, and then selected the samples. This is when the actual data analytics starts. First, recomputation of balances. So if you are uploading a lot of ledgers, the system will automatically try to establish the actual trial balance that must have been generated by the accounting software. So if the TB that you uploaded and the TB that this audit software has generated, if it is not matching, then the audit software will throw some errors and say these are the mismatches or these are the mistakes that have been identified. Then reperformance of mathematical calculations, where you have standard rates like depreciation, bank interest, fixed deposit interest rates, or you can talk of rental payments. All these areas you have fixed calculations. So those, if you reperform on your own and see 10% must be this much, is the entry 10% or not? If you divide the deferred revenue was booked for so much amount, if you divide it by 12 months, is it coming to this number or not? Have been analyzed on. Next, analysis of journal entries as required by SA 240. And then SA 240 is basically the fraud analysis. Then you have fraud investigation. Then you have evaluating impact of control deficiencies. So control deficiencies is this data analytics software will throw up some sample, and that sample we have to physically test for the documents and test of details and test of controls. AC 240 we will anyways talk about it when we come to that standard. Most likely SA 240 will be taken up by Usha madam. So once we reach that area, she will step in. Okay, so next, they're talking about the steps that we have to follow for the cats to achieve their objective. Even here, the very first thing that they talk about is understanding the business environment, including the IT environment. Always first remember SA 315. You need to identify, assess, and understand the entity for identification and assessing the risk of material misstatement. That is where you start your uh, basic aspects of starting with the audit. And then you define, once you understand the organization, you define your own objectives and criteria, then identify source and format of data. This is required because we are dealing purely with IT data. Where is this data coming from? Some accounting softwares are very data analytics friendly. They are designed in such a way that they are very data analytics friendly. Nowadays, almost most of the new software are like that. Identify source and format of data. Even the what do you call, the audit software has to have the capability to recognize that format. Let's say Excel, PDF, Word, or database. All these stuff, the audit software must be in a position to read that data. So the proper formatting is the format or the file type needs to be taken into consideration. Then you have extract the data, extract from the accounting software, then verify the completeness and accuracy of extracted data. That's what I was talking about, data cleaning. We need to check whether the data is complete and accurate. Then apply criteria. That is, once you upload, the samples can be generated. Those samples validate and confirm results. That is, whether the samples and the physical documents, physical controls are matching or not. And then whatever you have conclusion, whether it is correct, whether it is matching or mismatch. All of that you need to document, because once you have taken a sample, you need to document whether what happened with that sample, whether it is in conformity with the policies of the organization or not, whether it is in conformity with the audit standards and accounting standards or not. Everything you need to check, right? So once you have checked, even if it is complying, also you need to document saying it is complying. If not, also you need to say that it's not complying, and then the reasons for non-compliance, what are the audit proofs, everything you need to take into consideration. That's what SA 230 was talking about. Next, assess and report audit findings. Once you have those negative findings, then you need to communicate them to the those charged with governance. Those charged with governance is important because you, as an auditor, if you report to the CEO or CFO, you know what happens. The independence of the auditor is automatically affected by CFO and CEO are the persons who are dealing with the organization on a daily basis. They are the ones who run the operations. So when you report to them, what will happen is there is every good chance that they will try to control you. The report that you are giving, they will simply say, if you give this observation, next time you will not be there. And this is what happens with most of the auditors. So this is why there is a level which is higher than these people that comes into the picture, which is called as the audit committee. So audit committee is those charged with governance, a particular group of managerial board of level directors who will be assigned with a specific responsibility of overseeing the audits. So since they are at a higher level than the C-suite employees, the auditor has a very good chance of controlling any misbehavior by the C-suite employees. Even if they threaten also, you can still go to the board of directors, the audit committee, and say that, boss, this is what is happening. I'm not able to get my audit done. You need to step in and take things into your control. And this is very required because even one of the entities that I audit over here, there is this CFO who is very controlling and very dominant. So he doesn't like people questioning him or anything. So when we start the audit and we send up a basic query list, he starts fighting. By default, automatically he starts fighting. So what we do is we simply discuss with the management and say this is what is happening. Then they step in and stop the CFO and say let them do their job. So this is required. That is when the independence can be maintained. Otherwise, this person has gone actually to the extent of threatening people with their lives, with their thing in the saying I'll send goons to your houses and all. This is the level of threat that you can actually receive in the real world. Saying he'll send goons to your place, he'll send police to your place. So this is the level of pressure that chartered accountants actually face in the real life. Some people are absolute cracks, and then you have some people who are very politically connected, who are very rich. So when you deal with such people, it becomes very difficult for a chartered accountant to maintain their independence. So in such cases, you need to deal with someone who is high at a higher level than them, and that's where the board of directors and audit committee step in. So that is why if you see any communication that is required by the auditors, it is always addressed either to the board of directors or to those charged with the governance. So those charged with governance, in case of audit, it will be audit committee. Or there is also, it could also be compliance committee in case there are any compliance deviations. So it depends upon what is the requirement, but 99% it will always be audit committee only. For small scale organizations, it will be the board of directors. Okay. So some points to consider. What can be communicated. So even if there is no deficiency or if there are no deviations observed, what will we do? We will simply note saying there were no material deviations observed during the audit. Even that is a communication. So you have done the audit. You need to tell them what has happened, right? If there is anything, you will say, boss, this is the issues that we have found. Otherwise, we will say, boss, we have not found anything, and this is we feel everything is appropriate. So either way, you need to give a report, and that report, they are saying some of the points you can consider is one, weakness in IT controls. Passwords are not there. The firewall is not appropriate. The network, the way it is established is not appropriate. The cost that was taken, the purchased equipment is not required for the organization, or the purchased equipment is not sufficient for the organization. So all these IT controls, you need to check whether there are any weaknesses in it. And because of those weaknesses, what is the impact on the overall audit or performance of the organization? So just report those deficiencies to the management or to the committee, those charged with governance. It's the same thing. They have just put it in a flow chart. Does the finding exception result in control deficiency? Control deficiency is where the policy says there must be a control, but the control is either not working or it is not existing. So that is control deficiency. If it is yes, then report to the management. But before you report to the management, I have seen if the people are really strong, if the person who is sitting there is really logical, analytical, or really a person who understands the business, then they will always ask, what is the impact? Because we have seen in one case where it was almost a very large scale logistics organization. Last year, this happened. There was this very large scale logistical operations. Okay. And this company, when the audit report was submitted, there were certain points where there was no, magnitude or impact described to them. So they were asking what impact is it? Yes, you have brought it into the audit report, but what is the impact of this? I need to understand it either in terms of number or some basis. When you say it has a high impact, I need to see how much of my revenue is getting affected, how much of my operations is getting affected because of this observation. So the auditor who went there, he was trying to substantiate, saying, no, it's difficult to practically assess this and all. So then the board of directors said, then you report it only when you can actually quantify, because when you are giving us an unquantifiable amount, even we cannot waste our time on this. So you give me a number as to how much is the actual impact. If it is not possible, then don't report it. The board of directors themselves were telling. So whenever you report something in the audit report, there also must be an impact analysis. Why exactly do you think this is going to impact the organization, and then how much of it is going to impact my revenue? So let's say for this particular logistical entity, there was a fraud that happened with the warehouse selection process. Then we say, okay, boss, this is the market rate generally that is taken for the warehouses. And then this is what is the actual money and time spent into it. So this was 6 million, that is 3 million. So there is almost a 3 million loss. So when you put that number in place, saying there is a 3 million expected loss, then it makes more sense for them. Okay, this number is something that is material and can be considered at the board of directors level. So this is something that is required to be looked into. That is what at their level, that is what their thinking will be, because they, when you are talking about a very large scale shipping liner which is operating around the world, you cannot spend your time and money on some silly matters. Okay, so that is why the impact needs to be documented. It needs to be put in numbers. Only when you put it in numbers, they will be able to analyze. Next is yeah. So you have put it in numbers. Now, if we go to the right, it is asking, is it a significant deficiency or material weakness? Significant deficiency is the word which is used for test of controls. Significant deficiency. Significant deficiency means either there is a control which is not utilized or which is not followed, or there is no control at all. So it is as good as both the scenarios are as good as there is no control at all. Let's say scrap sale on the left and right, the inventory people are selling without any documentation, without any quotations, anything. Every time they give the same reason, saying we need to clear the warehouse. So but the organization's policy says it needs to be approved by the management, 3 quotations has to be there, you need to sell it only when the price is higher, all these stuff, the documentation will be there. But when it is not being followed, you need to see whether this is a significant deficiency. Okay, so significant deficiency is the word you use for test of controls. For test of details, you use materiality, material weakness. Deficiency is for controls, materiality is for test of details. If it is significant deficiency or material weakness, yes, communicate to those charged with governance and say this is the impact. Otherwise, what can we do if it is not major? If it is significant or material, then you need to directly communicate to them. Otherwise, what can we do? Can we test compensating controls, if any? If not this one, either are there any other controls? If not the three-way quotations, is the management approving the sale transaction? Yes, the management is approving sale transaction. Then not a big issue actually. Since the management itself says, okay, go ahead, then what is the whole point? Well, what is the problem? So if the management is not approving those transactions, you cannot just like that report. You need to see, analyze and say if the time at which they have sold is really the market, the upper price or the higher price in the market. Is it at a lower price in the market? You need to do other analysis and see whether this will actually have an impact on the organization or not for the year. So then that is, can we obtain evidence of other mitigating factors? The yes or no. Then is there an impact on the automated controls? IT மேல ஏதாவது impact இருக்கா? இதெல்லாம் பார்த்துட்டு you need to document the results of the assessment and through thought process in the audit file and conclude. Since here we don't feel it is likely the significant or material, then we just need to put it in the audit file and we don't have to report it. So this is how the audit or audit software also works. Is everyone has their own methodology of reporting it. And then we have the glossary. Let's see if there is any important part in the glossary. Application, audit evidence, automated CAT, control deficiency. See, that's what they're talking about. Deficiency exists when an internal control is either missing or not operating effectively. It is there in place, but it's not effective. To prevent or detect a detect a misstatement in timely manner by management. Next, data analytics, data processing, database, direct data change, ERP, for general IT control. General IT controls is also called as ITGC. IT general controls அப்படின்னு சொல்லுவாங்க. It's a industry standard term, ITGC, ITGC அப்படின்னா. Then there is information systems, IT, internal controls, mainframe, material weakness. Material weakness also we can highlight. A control deficiency or a combination of deficiencies in internal controls that is important enough to merit the attention of those charged with governance, since there is reasonable possibility that a material misstatement will not be prevented or detected in a timely manner by the management. So either it could have happened in the actual test of details, or because of the control deficiencies, there is a practical possibility that this could happen. That is also a material weakness. So, for example, if you need to understand it with a practical point, okay. I remember there was one observation where, the CFO that I was talking about earlier, that person was fighting with some accountant, and the accountant was terminated. Okay? So the accountant said, "You settle my dues. If you settle my dues, I will leave." And these people were not settling it because the CFO was completely controlling the process, and he was saying, "Don't pay that person. I'll see what will happen." Now, this and all works fair enough if you're in a certain areas or things but where the legal aspects are very strong, when the legal constitution is a little strong, in those areas it becomes a little difficult for you to enforce certain things. So here what has happened is the employee went to court. So now, instead of paying 1 lakh rupee, they ended up paying almost 1,75,000 just because of the ego of one single person. Just because of ego of one single person, they almost ended up paying 75% extra, which is a material loss for the organization, isn't it? So because there is a person, or because there is a control deficiency in that place, there was a unnecessary loss that has happened. So material weakness could be either something that have happened because there is no control, or even because of deficiency, it could happen, or it has happened and had a material impact to the organization. Even that is also a material weakness that needs to be communicated across. Privileged access, risk, segregation of duties, significant efficiency, software system. Okay, that's good enough. And we can close. ICFR Sarbanes-Oxley Act. Yes, Sarbanes-Oxley Act. This is where all of the controls, the risk and controls, the whole talk of risk and controls is coming from this act. It all started with Enron, one of the largest oil corporations of that period. This Enron was a big scandal which happened in some decades ago, and this was something that has shaken the US, no, not US, UK markets a lot. This company was based out of UK, and it was so powerful that it was able to control the politicians independently. Now, like how Amazon, Tesla, and Google can control the American politicians. Similarly, Enron was at such a large scale that they could control the UK politicians. And here, what has happened is they were dealing in some hedge accounting, and hedge accounting la vande they were doing some transactions which was not as per the prescribed manner of the financial authority of UK. Still, the financial authority was playing a blind eye to it because Enron was too powerful even for the financial authority. They had absolute control over the prime ministerial level. So, because of this, no one had a guts or no one had the control over this organization. And one fine day, when the markets were a little itsy bitsy, things went wrong, and their debt and their losses ballooned up like anything. So the amount that is supposed to be received and what is as per the projected as per the financials, it was not matching, and it was clear at some point that this is not working out. And that's when things started falling, and it had a severe impact on the markets of UK. Now, this is something that if there is a severe impact on the markets of UK, naturally, since it's a developed country, it will obviously have a ripple effect on the economy of and other countries as well. Now, this has forced UK to rethink on certain things. Specifically, the European Union had put a lot of pressure on UK to work around this subject. And that's when there were two prominent people, Mr. Sarbanes and Mr. Oxley. They have come together and given an analysis saying, if you need to stop anything wrong from happening, you need to control it at the root itself. You need to stop it from it happening in the first place. That is what is they define it as a control. You are making an accounting entry. When you are making an accounting entry, the person who is preparing it and the person who is approving it cannot be the same. This will have a lot of implications. If anyone is trying to do fraud, two people coming together and doing fraud is a little rarity. And on top of that, them doing fraud on all aspects is a much rarer aspect. So at some point, either one of them will get freaked out, isn't it? Some point, either one of them will get freaked out, and they will be, telling out somewhere or the other. So having a two-way control, one is reviewer and one is approver, one is preparer, one is approver. Simple things like this. You need to start controlling things. You need to start putting controls in place at the very root of things. So for every single transaction, for every event that is happening in an organization, if you set up controls around it, they say then the likelihood of another Enron happening is very low. And that's where they have come up with this Sarbanes-Oxley Act and said internal controls are the way forward. And from there is what we have all the other aspects. Internal financial controls over financial reporting, internal controls over financial reporting. All these things have later on developed as something adopted into the accounting standards and audit standards and the law everywhere. So the cause of all of it was Enron scandal, and then these two people have basically given the way forward, the guidance for the rest of the world, and that is the act that when we are talking about the concepts of risk control, SA 315, the whole ideology behind all of that has mostly come from the Sarbanes-Oxley Act itself. Then you have COVID, which is also devised by the by there is a specific organization called COSO. I think we have seen the definition. COSO. You can see it here. The Committee for Sponsoring Organization. So this is basically they are mostly into internal audits because the internal controls, the whole concept is the whole aspect of it is for internal auditors. The COSO framework is what defines the COVID control objectives for information and related control objectives for information related. That's all. There's a much larger full form, and that's not actually required for us. So COVID is what defines what exactly should be a control, what are the various things in which you can implement a control. All of this is coming from the COVID. It's like a guidelines. So let's say how we have the standards on auditing right now that we are studying, or the ISO standards, or the IFRS, the Ind AS. They are all standards, right? Similarly, COVID is also a standard which defines how controls should be. What exactly constitutes a control? How do you define them? How do you place them? What are the industry standard practices? Everything is defined there. Okay, so that's all, and we are good to go with this. Okay, so with this we are done with chapter number 6. Now comes the important discussion. See, I have been communicating the standards through my own notes. Okay, I have tried to communicate all the standards through my own notes, but I understand that all of you may not be very comfortable with my style of teaching. What I want to understand from you is, how do you want me to teach? Is it purely from the textbook? Let's say if we have this chapter, audit sampling, we have SA 530, which describes this audit sampling. So, should I teach from my own notes, give you a summary saying these are the headings that you need to focus on, this is the content you need to focus on, this is what you need to study? Is that how I do? Like how I have done for the previous essay 315, 320, 330, wherever we 405, we have taken a specific set of headings and we have discussed on that. So how do I do it? You want it that way, or you want me to go through the chapter and say this is what you need to highlight, this is what you need to look into, this is the heading, highlight this para, this is how you expect me to teach? Just give me inputs from your end so that this can be considered for the future classes. Okay, if there is no input from your end, there's nothing I can do about it. But for you to just get an understanding of what I am doing, I will show you. Yeah, in this itself, we can take essay 3530. Okay, where is your website? 5720. Where are the pronouncements? Pronouncements here. I will share the screen. So this is what actually a standard looks like. If you refer to the pure technical standard that is actually coming, this is what a standard looks like that is published by ICA. So ICA is the entity which can publish on these standards on auditing, because they are the authority for this. And just like in days, the way in which the manner in which things are presented will similar to the in days, or the format will be similar. So this is the actual standard which becomes the basis for you guys. So SA 500, if you see, this is where the whole definitions will be there, the requirements, the what is sufficient, appropriate audit evidence, everything individually they describe a lot, and this goes on, goes on, goes on, goes on, goes on. It's so detailed. It's so detailed. Even CA final students do not require to go through this. It is that much detailed, and it is more practical oriented. Okay. Now, if you come back to the standard chapter that you're looking at, let's take SA 500. There are only references which are coming. You won't have the entire standard in the textbook itself. It's not always practical to give the entire context of it in one single area. Even if we take the third chapter, that is where most of the thing is defined. See, here you have some of the descriptions, definition of audit evidence, and then you have certain things what can be used. Okay, it's not a complete thing that is described. And then there are two other things that we need to take into consideration. Either it is not completely required, or it is not there itself. Some things will be described in the standard, but it is not there in the textbook, or some aspects will be there in the textbook which are not at all required for you for examination purpose. Because some aspects they will simply talk about it for the, you know, from various sources they take it and they just put it there, which is not sometimes material or not relevant for you guys to read through or understand. So if you want to go by the textbook, you will practically not be having an exam oriented approach, because the audit textbook is definitely not exam friendly. So that is the reason what we do for the audit standards is we give a summarized content. Chapter 6 is something that is not a standard. So I have to go by the chapter. I have gone by the chapter. But for the standards, I cannot go by the chapter because it is either useless or there is the content is not there in the chapter. And most importantly, it is very haphazard. In some of the standards you should see there the content has been organized in a very haphazard manner. They have their own way of presenting things, but it's not practical when you try to understand the standard on a overall perspective. If you're asking me if I am questioning the ability of so many technical experts sitting in the ICA board of studies, yes, I am questioning them, because I have shown you in the financial ratios chapter itself that the very ratios itself are defined wrongly over there. So there is a practical possibility that the subject is way in which the material is defined is not very exam friendly or student friendly. That is why my standards will have to be from an external source. I have prepared the summaries of it, and I will be copying. I will be presenting to you for the required content. Okay. So, in case you guys are still not comfortable or you need some changes, you need to talk about it right now, so that since the main standards, all the SA 500, 600, 700 series are ahead of us. If there is any change that is required from me by you, then please speak out. We can discuss and sort this matter right now, so that we can have a proper, flow in place. You I can also prepare according to your requirements and give it across. If there is anything, please speak out. I'm very open to discussion. I take things practically because it is your life. You need to also have a control. You need to also have a understanding of the subject. So I have told you my side of opinion. So if there is anything from your end, you need to speak up. Okay, so the only thing I can assume is that the matter is sorted. If not, if you still have anything that you want to communicate, you can always, if you're not comfortable telling me, then you can always reach out to Narayan Babu sir, tell him what is the issue that you're facing, and he will definitely come back to me so that we can sort things out. So let's continue with the chapter. Okay, so See what is the standard that we can take now. We have completed 300, 315, 320, and 400 series. Overall object is 200, 210, 220, 230 is over. 240, 250 you can take up later on. This is not in the flow. Okay, so we can go ahead with the 500 series. Okay, let's talk about SA 500 series. Okay, let's start with something simple. Let's talk about the meaning and nature of the audit evidence. What exactly constitutes the meaning, or what exactly constitutes audit evidence? So, what are we talking about when we use the word audit evidence, Abhina? It is basically three things. That is, one is the information that we get received from the entity. Okay. Like I said, audit documentation, it could include a broader scope. It could be much bigger than the audit evidence because it includes the working papers, everything stuff done by us towards the audit. But when we are talking about audit evidence, it has to be received from the entity. Information that is either received from the entity or used by the auditor. Or used by the auditor. Why do we say or used by the auditor? Because if I say I am referring to a particular, I'm trying to give a disclaimer or something like going concern, then there is a particular standard which I'm talking about when I'm, trying to give a disclaimer on going concern. And I will refer to this particular standard and say this is what is the reason. Just a minute. Yeah. So Either the information that is received by from the entity or used by the auditor. When we are talking about the word used by auditor, we are basically looking at documents or concepts that we have referred to come to a appropriate conclusion. It could be either a standard, it could be a reference material, it could be some publication, it could be guidance notes by ICA, it could be law, it could be any judgments. It could be anything that is used by the auditor, which is these things do not come from the entity, but it could be used by the auditor. Okay. Either used by the auditor or information received from the entity. Towards what purpose? Towards what purpose? Towards arriving at conclusions. There has to be some conclusion of the audit, right? So you have got some documents from them and you arrive at some conclusions. So this conclusions, based on these conclusions, you give an audit opinion. So this is basically what we are talking about when we talk about, is this? So when we talk about audit evidence, this is the very definition of it. It is information which is received from the entity. If you want, I will put a higher number. Information received from the entity or used by the auditor towards arriving at conclusions, observations or conclusions, for arriving or issuing an audit opinion. For issuing an audit opinion. What is the audit opinion? That is what SA 700 series are all about. So whether it is modified, unmodified opinion, whether there is a disclaimer, all that stuff we will discuss in SA 700 series. There are various types of audit opinion and that will be described over there. So this is basically what audit evidence is and as defined by the standard. So now let us look at what is sufficient and what is appropriate. What does the word sufficient mean? And what does the word appropriate mean? We have already gone through this, but we can again document. Okay, what is sufficient? Sufficient always talks about quality. Okay, sufficient always talks about quantity. And then we have appropriate, which always talks about quality. Sufficient is all about quantity. Sufficient, appropriate is all about quality. How do we measure whether it is sufficient or not? How do we measure whether it is appropriate or not? For us to measure whether it is appropriate or not, what are the measures, Abdina? They say, is it relevant and reliable in arriving at the conclusion? If it is relevant and reliable in arriving at a audit conclusion or conclusion of an observation, then they say it is appropriate. How can it be relevant and reliable? Whenever you're giving any audit observation, you need to show them some documentation, some backup saying, yes, this is what has happened. This is the reason why we are projecting this one. There are many instances where we take up some observation and we try to put it, But what happens is, since the CFOs and CEOs receive the report, we have an initial discussion with them, all the observations. So at that level, what happens is they generally tend to, just stop. They tend to correct those things at that instance itself. So this is what is relevant and reliable. If you let them give them a chance to correct. If you later on try to get that observation, or if you later on try to document that, it will be a problem for you. So what is relevant and reliable in arriving at the conclusion? Let's say you have observed some compliance issue. So then you need to document saying what is the compliance issue, what is the issue, where did you identify it, what is the return where you identified it, what are the set of documents that you have taken to identify it. All that you need to take into consideration and bring it into the documentation. So when we are talking about appropriateness, the things that we are looking at is it sufficient, is it appropriate to help us in arriving at the conclusion. We have done the audit. If someone else is looking at that documentation, will they be able to pull out those conclusions, same conclusions from the given set of documents? That is for the appropriateness. And then let's talk about things for sufficiency. Sufficiency is always affected by the risks of material misstatement. When we take a sample, there are a certain set of risks of material misstatements that we may come across. So for that risks of material misstatement, let's say sample size is 30, and we have observed this risk of material misstatement in 5 samples. Now, since we have observed it in 5 instances, do we apply the same logic for all the 30 samples? Do we go back to all the 30 samples and see this? Or do we increase the sample size to a much higher number? Do we increase the sample size to much higher number and see how many more such instances will come? Okay, so this is sufficiency. If you believe this is a significant risk, if you believe the observations that you have identified, the risks of material misstatement that you have identified, if you believe they are significant, then you may have to increase the sample size. So that is what is all about quantity. How much will you increase? It always depends upon the nature of the misstatement, the nature of the observation that you're talking about, the nature of the issues that you're looking at. All of these needs to be considered, and you have to increase the sample size, or you have to do more audit procedures to have a appropriate conclusion. Naturally, if a fraud is observed, naturally the sample size will increase to 100%. You will try to check all of the documents in that ledger. Okay, but otherwise we will simply go by the sample size. So sufficiency is always based on the risk of material misstatement. If there is a risk of material misstatement, then whether we have covered all those areas or not, we will check, and whether with the documentation we have observed how many documents, 30 or 100, whatever it is it enough for supporting our conclusion or not? So these are the two measures that we are looking at. Sufficiency is purely based on the risk of material misstatement. Appropriateness is purely based on whether we have documentation adequate to support our conclusion or not. Okay. So, just a minute, charging is gone. Okay, so let's talk about the further things. Sufficiency and appropriateness is the very first thing that the standard defines. Next, look at what is the information that is produced by the entity. When we say information produced by the entity, what can be considered as the information produced by the entity? Here, information received, or you can use the word produced. Information received from or produced by the entity. Now, what does it mean when they say the information produced by the entity? Let's copy this. Okay. So when we are obtaining any audit evidence, we need to evaluate whether it is sufficient and appropriate or not. That is the very first thing that we need to check. Evaluate whether the information is sufficient and appropriate. So instead of defining the name of the document, they are just giving a parameter and they say if the document given by the entity is enough for you to sufficiently and appropriately arrive at your conclusion, then it becomes an audit evidence, whether it held accuracy of information or not. In that case, if these two things are there, then whatever information is produced by the entity, then it can be a audit evidence. If not, if there is something information that is used by the auditor, Abdina, what could be that? Information used by the auditor, like I said, there has to be some standard document or something that they have to refer to. Specifically, the standard talks about people like other auditors, SA 600 series, where you use the work of other professionals. If we are using the work of other professionals, then there are certain things we need to check before we can establish whether we can use their work or not. So when an information is being used by the auditor, the very first thing that you need to do is evaluate whether the information in the document is prepared by a competent person, Why do we check whether it is prepared by a competent person, Abdina? The first thing that you need to see is who has signed this document. If that person is very well known in the market or they have a good reputation in the market, then you can directly rely on such audit reports or any reports provided by any other auditor or a legal representative or any internal auditor or any tax consultant. So if it is signed by a person who is well known in the organization, or if it is carried out by an entity which is well known in the market, then we can have at least a satisfaction that it is prepared by a competent person. Okay. That competence will establish the capability and objectivity. What is capability? What is objectivity? When it is signed by a competent person, their capability means whether are they a professional, whether they are having a good reputation in the market, all that needs to be established. And then the objectivity. Objectivity is, are they working under the influence of someone? This needs to be established, because even if the person is a competent person, what if the person is a relative of the management? What if the person is a relative of the CEO? What if the person is a relative of the CFO? In such cases, we need to be very careful, even though the information is submitted by a chartered accountant, even though the submission is coming from a established professional in the market. We cannot just like that take that, because first you need to evaluate the competency with respect to what? Capability and objectivity. When we are using the word objectivity, it means independent. Have you uninfluenced uninfluenced by any of the parties, either internal or external? That is basically called as objective. If you could stay like that, if you could stay independent, then you can consider saying, okay, this person has prepared this. There is no objectivity issues over here. The word objectivity is actually very, very broad. It's not a very simple term. There are, like, if you just have to discuss on that one single word called objectivity, it could be a 2 hour session, because the word objectivity itself needs to be discussed in very detailed, and at this level it is not required. But there are so many parameters that are listed out for a professional to establish whether a person is objective or not. There are certain types of risks they talk about. So these things need to be assessed from while ensuring or while taking the report of someone. Now, once you have got their report, first you have evaluated their competence. Next, what we have to evaluate is the work that they have done. So, what is the work that they have done? What is their regular speciality? What are the standards? What are the assumptions that they have used? You know what has happened is, it was a very funny instance, that one of the instances that happened with us is, there was an actuarial report on the LIC amount that needs to be deposited by the company. So every year there is one actuarial person who comes in and gives the report saying, this is what is the life expectancy of people in your organization. This is the attrition rate. Attrition rate abdina, the rate at which people join and leave. Attrition rate, the rate at which people leave. This is called as attrition rate. So this rate, and then what are the increments? What are the bonuses that people receive? What are the salary increases that people receive? What is the inflation? In the mari nariya factors irukku, which the demographics, where are they located? What is the population? Where is the population from? What kind of life expectancy? What is the male female ratio? All these things. There are even further things that needs to be taken into consideration for arriving at an actuarial report. ஸோ அது எல்லாமே ஒரு ஃபைலில் வந்து தி accountant has submitted to the actuary person. Now here what has happened is, there were 2 sheets in the document. For one is financial year 2020, one is financial year 2021. Now, unfortunately, the actuarial person just looked at the first sheet and prepared the result, and he has issued the report. So when we were doing the statutory audit, we have checked, and we just asked them to give us these source documents that you have given to the person. So then when we checked, we realized that they have considered the wrong financial year. They were supposed to take financial year 2021, but the person, the expert who has given the report, has prepared the data based on 2020, because that is the first sheet that is coming up in the Excel. So now this had led to the revision of the report given by the actuaries person. So now the professional had to revise their report and then reissue the report. So always it is important that when you are using the report of another person, you need to also look at what is the source data that they have taken, and what is the assumptions that they have taken. This assumptions area is something that many people can play with. Here, you specifically need to look for what are the exclusions. So, if you remember the type 1, type 2 report that I was talking about, so type 1 is before the audit. They have not given any confirmation, or they are not giving any true and fair view there. They are simply saying the management says the internal controls are there. So we also are giving the same thing, saying we are relying on their adequateness and say that the internal controls are in place. But when you're looking at the type 2 report, it is much detailed. It says whether the auditor believes the true and fairness has been established, whether the risks of material misstatement have been adequately taken into consideration or not. All that stuff is described in that thing. So in the type 2 report. So when you're looking at any report, what you need to very specifically look for is the assumptions, what they have excluded, what they have included. In this exclusions is where most of the issue is. So for our audit purposes, for our statutory audit purposes, can we consider these reports? Because if it is excluding a material aspect of it, then we cannot take it into consideration. So first we have analyzed the competence of the person who has issued. Okay, he is an actuary. Yes, we can take it for consideration. Next, look at the work done or the report submitted. What is the source data that they have taken? What is the assumptions that they have taken? What is the speciality of this particular person who is giving it? Let's say there is a legal case, okay, on which the company has submitted a legal opinion. Now, if it is a civil case and the opinion is submitted by a criminal lawyer, do you think it will have relevance? You need to even check. Here in the report, they will not say he is a criminal lawyer. He'll simply write his lawyer number, the membership number, and he will sign the document. But you, as an auditor, need to check whether this person has the relevant speciality or not. Whether he is a criminal lawyer, what kind of lawyer, what is his speciality, what is his area of expertise. Even the chartered accountants also, how often they sign the audit reports. Is he a statutory auditor? Is he internal auditor? Is he IT auditor? We need to take that into consideration when we are checking the reports given by them. Next, evaluate the report. Finally, what we need to check is whether the conclusions given in the report, whether the same thing we can take into consideration, whether source data, assumptions, and conclusions given in the report match with the regular understanding that you have, the regular analysis that you make. You, as an auditor, you will generally have a overall understanding, saying, okay, this is how the report should be, this is how the conclusion should be. Ideally, these are the set of conclusions given. So all these things you will have in mind, which you will try to establish whether they have given it in the same manner or not. So whenever you are using any report by any other person, any other professional, it is called as information used by the auditor. So SA 600 series is where this will get covered. So when we are doing that, there are three things that you need to look into. One is the competency of the person, the speciality and the report, what are the source data, what is the assumptions, and then what is the conclusions that the report has given. Here they can also differ in terms of what was the conclusion, what was the assumption taken for the given, or assumptions or source data given by the entity used by the expert. So even the if for the, let's say this is 100%. What if they are reporting only on 30%? They have also gone by a sample and they have reported on that. So the reason again we are talking about the source data and assumptions is because we need to see what is given by the entity and what the expert has considered and reported. So that is basically the information. So audit evidence, the title, the meaning or definition of audit evidence is information received from or produced by the entity. It is produced by the entity means we have seen that it has to be appropriate and sufficient. Only then you can consider it as information produced by the entity or information used by the auditor. If it is used by the auditor, if it is a standard or a reference material, publication, guidance, anything, then it is all straightforward. You can just rely on that. But if it is a report, then you need to analyze whether that report is applicable for you or not. What are the checks you do for that? The competency, the work area, and then the final conclusions of the report. That is what you look into. Okay. Now, what are the procedures for obtaining the audit evidence? What are the methods and procedures that are there for you to obtain the audit evidence? Abhina, first, first is SA 315 always. What do we do? Risk identification and assessment. So once you have done the risk identification and assessment, naturally you will do the SA 330. What is that? Responses to the identified risks. Identified or assessed risks. Not identified, assessed risks. First thing, the very first thing that you need to do is identify and assess the risks of material misstatement. Once you have done that, you know that these are the responses that you need to do. When you talk about responses, we said that that is the actual audit that we are doing. What are the responses? We have already talked about it. Okay. What are the responses? Test of controls, test of details, and substantive audit procedures. These are the three things that we have discussed in SA 330 also. We said whenever you are responding, these are the three things that we need to look into. One is test of controls, one is test of details. This is for deficiency, this is for materiality. Deficiency of controls and materiality of misstatements. And here is where the regular data analytics, all the other stuff comes into the place of standard audit procedures. So this is what you need to do for obtaining the audit evidence. First, identify and assess the risk. Then you respond to those risks. When you are responding to those risks, the first thing that you need is the test of details, the documents. Then once you have got the documents, you test the controls. And subsequently, you may apply the substantive analytical procedures or audit procedures that you want to take up. Now, what are the ways in which you will get these? We have seen there the flow chart. If you remember, we have seen inspection, next observation. Next, we thought about what are the aspects that we looked at. Inspection, observation, confirmation, recalculation, reperformance, and analytical procedures. Let's take the same thing. Inspection, observation, confirmation, recalculation, reperformance, and analytical procedures. These are the methods in which you get the audit evidence. So the procedure is basically through the risk and responding to the risk, and then for the methods, you do these things. First, inspect. While inspecting, if you get anything, you ask for that particular document. Through observations, similarly, while carrying out the audit, you observe people, you observe documents, you observe procedures, you observe actual activities, everything, and then you ask for documents. For confirmation, you ask any external confirmations or any reports by external third parties. You get the supplier statement of accounts, you issue balance confirmations, all that stuff is confirmation. Then there is recalculation for fixed type of ledgers like depreciation, rental calculations, deferred revenues, deferred expenses, all that stuff. You can have a fixed calculation. So you do the recalculation based on the source number, and then you see whether the entries, whether the data is appropriate or not. Then there is reperformance. You try to perform the procedure in the same manner as that of the regular accountant and see whether you are getting the same results or not. That is reperformance. And then analytical procedures, the 5% analysis, the ratio analysis, the simulations, the benefits law detection, all of that is basically your analytical procedures. Okay. Finally, this is reliability of audit evidence. What makes an audit evidence reliable? For that, they have given some parameters. The ICA has given some parameters for the reliability of audit evidence. What are the parameters? They say external evidence is more appropriate than internal evidence. What is that? If there is a supplier from whom you have purchased the materials, now the supplier statement of account will be there, and you will have supplier ledger in the entity's books. supplier statement of account will be there. Also, the supplier ledger will be there. Supplier ledger is basically your internal accounting. That is the internal evidence. And then you have the supplier statement of account, which is external evidence. So this standard particularly says external evidence is more reliable than the internal evidence, because internally people can do any fraud or anything around it. But when you have external evidence, it is more giving you a more affirmation, a higher affirmation that this is what is the number. But it does not mean that the supplier's statement cannot be wrong. It does not mean that the supplier's statement cannot be wrong. I will take another example. Bank statement by bank, bank ledger. So if a statement is given by the bank, we can be sure. If a statement is issued by the bank, we can be sure that yes, boss, this is the number that we are looking at. This is what there is. But I have personally seen in many of the instances that the bank statements are not always correct. It just happened yesterday also. We were looking at one bank statement, and none of the salespeople are confirming that this sale has happened, but some money is received in the bank account. No one knows where it has come from. No one has swiped the numbers. No one has taken that this thing. It is not coming in the machine, the daily reconciliations also. And then suddenly there is a credit in the bank. Okay. So similar way, there are also debits in the bank where they do some charges and all, which may not belong to our entity. So this credit has come, and not a single person in the organization is able to give any documentation for that. So it's not always that the audit evidence, the external evidence is more appropriate, but external evidence for a auditor, the external evidence will at least give you a higher confidence that saying that the internal documents that were submitted to you can be considered or taken into consideration. Next. When is the internal evidence appropriate? When can you consider the internal evidence as a appropriate number? When the internal controls are adequate. If the auditor believes that the internal controls are adequate and reliable, or you can simply use the word efficient and effective. That is the keyword that is used for the internal controls. Just how we say deficiency of internal controls, or we say materiality of misstatements. Similarly, for internal controls, you can say they are effective and efficient. For audit evidence, we say sufficient, appropriate audit evidence. So these are like the keywords that you attach to them. Similarly, for internal controls, you can use the word efficient and effective. When can you take the internal evidence to be appropriate? Abdina, first the auditor has to get a satisfaction that it is efficient and effective. The internal controls are efficient and effective. In that case, you can rely or give a higher reliance on the internal evidence. Direct is higher than indirect. What is direct? What is indirect? Now, there are many instances where the, let's say, just take this example. Let's say you are trying to get some documentation, you're trying to get some balance confirmation. Let's think of the balance confirmation. This is a practice for statutory auditors. You try to get the ledger balance confirmation. Now, When you are trying to get that balance confirmation, the written external confirmation standards also talk about two types. One is you directly approaching them or you asking the entity to get the document. So here the standard is saying if you directly ask them, you approach them directly, but the company has to put a seal saying this is our external auditor, please give them the document of dinner. The company has to put a seal, or if it is an email, they have to be marked in the CC. So when you directly approach the supplier through the organization, then it becomes a direct evidence. And then if the entity is directly approaching the supplier and obtaining the documents and submitting to you, then it becomes a indirect audit evidence. So which one is more reliable? Naturally, when you directly email to them and they respond directly to your email, that is more appropriate, and that is what you can consider as the having the higher precedence than the indirect one. Document is better than oral. This is something that we all need to understand. There are many instances where we faced issues because of this. People will say, panala, panilla, but that never happens. So this is one of the biggest issue. You can place trust on the employees of that organization. But the thing is, if your work is not happening, you will not be able to complete your audit. So always try to document as much as possible. When you're trying to when I'm using the word document, it could be request by email. It could even be request by email. It's just one of the examples. I'm not saying it is everything. I'm saying this is one of the examples. So when you are requesting for documents, if you believe that person will play around, then try to request the document through a email so that there is a document in place saying, boss, this is when we have requested and see till now they have not responded with it. So you can specifically give a timeline. So this particularly happened where one of the CFOs, they complained to the management saying these people are dragging the audit. Just like that, these people are dragging the audit. It's not happening there. I don't see an end to this. Abdina, he complained. Then the management got very angry and they came back to us. This is not expected out of you, everything. Then we simply sent them all the evidence saying this is the date on which we have emailed them. This is the date on which we have received the documents. This is the date on which they have sat for the discussions, everything a very detailed timeline along with the actual evidences we have submitted to them. And then they went back to their own employees and said this is not correct on your part to delay so much and blame it on the auditors. Okay. So whenever you have a documentation in place, that is more standard and that is more considered than the oral request. And finally, original is always better than copy. I have seen this particularly in the case of share certificates. Share certificates வந்து மோஸ்ட்லி ரெக்வெஸ்ட் பண்ணா இன்டர்னல் டாக்குமெண்ட் சீக்ரெட் டாக்குமெண்ட் அப்படின்னு சொல்லிட்டு காமிக்க மாட்டாங்க. Okay. So in such cases, what you need to do is you need to say, see, I don't want your original. At least show me the original. I will compare the copy that you have submitted to me. It is like I said again, share certificates is only one of the examples. It is not the only example. I'm just taking one aspect for the explanation purposes. So if let's say the share certificate is there, the company secretary will be like, no, this is very important document. I cannot take it out. Everything they will see. But when as an auditor, if you need that confirmation, you need to go to that extent of getting the original copy. You can just tell them, don't don't give me the original, but show me. You hold it, you show me, just show me so that I can compare with the copy document that you have submitted to me. And I have read some legal cases where this has happened, where the copy that was compared was photo edited in comparison to the original document. So in cases where you feel it is required, it is always more appropriate to go ahead with the original document and see what is being done. Because most of us know, as article assistants also, we know that we submit fake bills. Most of the people, you if not you, so many people around you must have done that. And this is something, unfortunately, it is very common. So the bills that were submitted, or the documents that were submitted, the invoices that were submitted, they all can be digitally altered. Even the flight tickets, the boarding passes, everything could be digitally altered. People nowadays are modifying the COVID test reports or PCR reports. All of that, they are changing, right? They are digitally changing and submitting. So when we always request for an original, what happens is that we can at least check the authenticity of it. That's why COVID reports are nowadays coming with QR codes, so that when you scan the QR code, you will directly get the original copy that is issued by the organization. So that copy and this document that we have in our hands, we can always check, isn't it? And see whether it is original or not. So that way we can have more reliance on this thing. So this standard is saying audit evidence is reliable in these instances. Generally, consider the external evidence as more reliable over the internal evidence, but that does not mean internal evidence cannot be considered. When can we rely on the internal evidence? You can rely on it if the controls are effective and efficient. Next, if it is directly obtained, it is more it can have higher precedence. If it is documented, it can have a higher precedence. There have been many instances in my experience where what they say verbally and what they say over the email, they are two completely different stories. So always try to get things documented. When you document, people get scared of lying. People try to project things in a different manner. They will try to act smart. Everything will happen when you request for a documentation. So what we need to do is we need to get that document in place. Next, original copies, share certificates. I have seen legal things for COVID test reports. I have seen my own friends giving fake certificates, everything. So, but when you scan, if anyone goes to the extent of scanning, you will actually end up with a different report. So, it's always that original number, original document, which gives you a higher confidence that this is the document that you need to rely on. So that is the list of reliability concepts that this standard provides you, and says as a guidance that these are things that you can consider whenever you're dealing with audit evidence. And this is all with SA 500. Next class we can take up SA 501. Okay, so we'll stop the class for today here. Thank you, everyone. Otherwise, just unmute and talk. What is the issue that you guys are facing? Mr. Leo, Priyanka, Kishore, Prabhu, since only 4 of us are there, are you guys facing any difficulties? Is there anything that I need to change from my end, or what exactly do you expect from me? If you could just help me out, I could work on it. Leo? Guys, at least respond. I don't know if you guys are even listening or not.
Yes, sir.
So anything that you expect from me more, or any particular thing where you need more help or support, or what is it that is expected out of me? You guys can be open. There's nothing wrong in an open discussion. If you have any requirements, just let me know. I will work on that. Okay, Miss Priyanka,
Yes, sir.
is there anything that is expected from me by you?
No, sir. Actually, we need to change.
No, that change is something that you have to take care of. That I cannot control. So what
Yes,
I'm asking you is,
sir.
what is the thing
Yes,
that
sir.
I need to do? Is there anything
No,
that
no,
I can do more?
no. You're right only, sir. We have to do. We have to work hard for us.
Okay. Thank you, Mr. Kishore. Kishore, ತುಂಬಿಟ್ಯಾರ? Recording session ನಡೆದಾ? Okay, Prabhu. Okay, up to you guys. Okay, so we'll stop the class here today. So we'll continue with essay 501 in the next time. And by default, please keep taking running notes. Audit is one subject, or all the theory subjects are something where you need to take the running notes. Otherwise, you will not have an understanding in the future. You will always be confused. Since I'm giving a lot of real-time examples that I'm facing, these examples are not something that will help you understand the subject more. So as and when I give them, you try to document, because everything cannot be put on paper. So you try to put it on your notes or whatever running notes you're having, so that it will help you understand the subject more. Okay. Thank you guys. We will stop here and have a good Sunday. Thank you everyone.
Thank you,
Thank
sir.
you.